Already recording.
Oh, thanks, Maria.
You're welcome.
You get a raise. Well, welcome to the roundtable on commercial property assessed clean energy programs. I'm Ken Hughes of the Coalition of Sustainable Communities. Welcome one and all from around the state and around the country. We have some great panelists to talk about how we can apply commercial PACE, as we'll call it from now on, in New Mexico. It's been on the books in one way or another since what, 2008, 2009, but really has not been able to be taken off until it was tweaked recently. Eric may be able to give us some information on how that has happened. And finally, we have some programs.
Thanks for lunch, brother. Good to see you. Hope you don't move to Texas. Stay around.
Yeah, I don't think so. Let's see how this interview goes.
Okay, if you can put yourself on mute, that'd be great.
That's with Los Alamos?
Yeah.
Good luck. Good luck.
Sorry about that. So today we have Eric Christiansen with Adelante Consulting, who runs the CPACE program at the Economic Development Department, and Johanna Nelson from the City of Santa Fe Economic Development Department. We'll talk about how she hopes it'll work with commercial entities here in the City of Santa Fe. Lainie Rowland is joining us from New Jersey with Allectrify, to offer a chance for smaller commercial entities to take advantage of the CPACE program. And finally, we hear from Zachary Taylor, who will talk about how the new Climate Investment Center could complement CPACE funding here in New Mexico. So with that, I'll turn it over to Eric and take it away.
Thanks, Ken. Thanks for inviting me to present. Let me just share my screen here. I'm excited to share a brief overview of the New Mexico CPACE program and to just be part of this conversation of how we can support the CPACE market to grow throughout New Mexico. So as was mentioned, my name is Eric Christiansen. I'm a project manager at Adelante Consulting, which is a New Mexican environmental consulting company. I'm based out of Albuquerque. And as was mentioned, we have been asked to serve as the program administrator for the New Mexico CPACE program for the next 4 years. So the program is a program of the New Mexico Economic Development Department, and then we serve as the administrator. And as was mentioned, CPACE stands for Commercial Property Assessed Clean Energy. It's an alternative source of financing for improvements to commercial properties. It can cover both the direct and indirect costs related to 4 categories, which is energy efficiency, reducing water consumption, generating renewable energy, or building resiliency. And so building resiliency could be looking at wildfire resiliency, stormwater management, those types of elements could fall into resiliency. And eligible properties would include any privately owned commercial, agricultural, industrial, or multifamily property of 5 or more dwelling units. So that's where we have a slight overlap with residential. If it's a multifamily property of 5 or more units, it would be eligible for CPACE. And properties can also be owned by a not-for-profit organization, but not by public entities, government entities. Just looking at the program across the US, there's over 90 CPACE lenders, 7 billion funded up until present on over 3,000 commercial properties. This next slide will just kind of share where CPACE has active programs. You'll notice that some states have enabled legislation, but may not yet have an active program. But I believe we're either at 32 states with active programs, or maybe just over that, with New Mexico being one of the more recent ones. And then Washington, DC is also included. So how the program is established, states would first pass a statute. And as Ken was alluding to, There were earlier iterations, but then a latest version of the Improvement Special Assessment Act was passed in 2023 through House Bill 228. Unfortunately, I don't have a lot of background information about, what happened prior to that or what led to the changes. That might be a question for someone at the New Mexico Economic Development Department. But I think there were some elements of the program that needed to be tweaked to make investors, more comfortable. And also there wasn't a statewide program administrator. So that was a big focus for EDD, was to bring an organization on that could serve that role and take some of the administrative burden off of local government. So that definitely was, one of the changes. And so Adelante, as I mentioned, was brought on board at the beginning of 2024 in February. And then we launched the program in April of last year. So we haven't quite yet hit the 1-year mark of CPACE in New Mexico as an active program. And then the next step of authorizing, once the state has passed the legislation, is to support counties and municipalities to opt in. So counties would need to pass an ordinance. Municipalities could pass a resolution that allows the county's ordinance to apply within their jurisdiction. It looks different in different states, but how it works in New Mexico is that we do require both. So both the county and municipality would have to opt in for a project within a municipality to be able to utilize this financing. We have sample legislation, and I'll share, some of the local governments that have already opted in. And then just to kind of reiterate, this is a very unique partnership in between the private sector and local government, where local government facilitates the placement of an improvement special assessment on a property. But really all of the funds are coming from the private sector. So there's no public dollars or subsidy included. So this is a general overview of the application process. Very early on, we would connect the property owner or the borrower with a capital provider or lender for them to agree on terms. Once they've agreed on the terms of their loan, then they would submit their project application to us. Some of the necessary documents are listed in the top right. So this would include our project application form, which includes a checklist. Lien holder consent is another document that's required, and we'll get to why that is later in this presentation. And then there's also a certificate of eligible improvements that's completed by a professional in the field who would kind of sign off on how an improvement meets the categories required for this financing. So once we've received an application, we would have 10 to 20 business days to respond. Oftentimes we're a lot quicker than that. We do it on a rolling basis. And again, we're not rejecting anyone as long as they meet the requirements of the statute and ordinance, then we'll approve them. If additional documentation is needed, we'll work with the applicant to get that. Once the application is approved, we would then notify the designated representative of the county, which for the most part is the county manager. And they would be responsible for signing off on 3 closing documents. And then the special assessment lien could be recorded. And that can either be done by the county, or sometimes they can delegate that to the applicant. It just depends on the preference of the parties involved. Once those closing documents are signed off on, the capital provider will then disperse the funds upfront, which is another advantage of CPACE financing. And they will be responsible, by they, I mean the capital provider, for billing and collecting the funds, the repayments of the loan that's been given. So one of those 3 closing documents that I mentioned earlier that the county signs off on is a document that passes this responsibility to the capital provider. In earlier formats of the program in other states, how the funds were kind of repaid is it was collected through the property tax bill by the county, and then the county would be responsible for dispersing the funds to the relevant capital providers. Obviously, this was, a burden to the county, and so this has been tweaked in numerous states, and new states that are rolling out the program have adopted this new method of just passing that responsibility directly to the lender. So all that to say that it operates very similarly to a typical loan, but then legally it still retains this special improvement assessment.
Eric, can I ask you a question?
Sure.
Previously, I thought the county assessor or the treasurer had a major role in this project. This is the latest version of the CPACE. It's a reduced role. Is that correct?
That's correct. Yeah, and it was really to remove that responsibility from counties, and so now the capital provider would be responsible for collecting the funds. Yeah.
Thank you.
Yeah. And so then once the repayment is complete, then of course the release of lien would be recorded. And that just gives you kind of a general overview of the flow of an application. Some of the typical measures that are funded by CPACE in those 4 categories that I spoke to would include lighting upgrades, HVAC systems, building envelope, automatic building controls, boilers, hot water heating. And then in terms of renewable energy, we're looking at, solar, microgrids, EV charging stations could all fall in those categories. And the categories are meant to be quite broad and encapsulate a lot of different types of improvements. So it's really for the applicant to make their case on how certain improvements could fall into those categories. And then to have a professional, sign off that would be the case. And we'll be looking at a few case studies near the end of this presentation, which will again kind of emphasize some of the common measures that are funded. So general CPACE benefits include that it can finance up to 100% of direct and indirect costs. It can provide fixed interest rates up to 30 years to repay. Something I found very interesting is it has a 3-year look back period. So for improvements that were made within 3 years of their application, they can refinance those costs on a property. And this both for the look back period, but also, CPACE in general can be used both for a retrofit and for a new build. And so I should clarify that as well. And then CPACE is secured by a property lien, so there's not a personal guarantee attached to it. And it's non-accelerable in the event of default. Benefits for property owners and developers, really it's about overcoming the upfront costs of a potential project, increases the property value. In certain cases, it can lower the operating costs through energy efficiency measures to such an extent that it outweighs the repayments for CPACE financing. Obviously, this is not every project and wouldn't apply to the case studies that we're going to look at. But in cases where that applies, it's obviously a benefit. And then because it's a special assessment and it's tied to the property, it's transferable upon sale. So that's an option for the property owner as well. Benefits for the county, municipal governments. We really talk about this as an economic development tool, job creation, allowing projects to complete, increasing the building stock value within their jurisdiction. For local government that have sustainability goals, it can also reduce the carbon footprint of buildings, increase their resiliency, and to, I would say, a smaller degree, sometimes negligible, can increase property tax payments as well. And then benefits for the capital providers. So, it really is tied to this improvement special assessment that's placed on the property, which gives investors greater security and then allows them to provide more competitive rates, but then also allows for increased collateral value and cash flow. And then for existing lien holders, the pitch is really that it enhances property value, can improve the building's longevity. You can see their collateral improved without a significant increase in credit risk. If you look at CPACE financing transactions across the country, there's been a very low level of default. And then financing is only permitted with consent of all existing lien holders. So lien holders are not cut out of the conversation. And we'll get to this, but the reason this consent is required is because the special improvement assessment will supersede any liens on that property. And so we'll take a look at the exact language that's outlined in the statute for that, which is right here. So in terms of seniority of lien holders, there's an excerpt here from the statute, and reading halfway through the paragraph, it states that the special assessment lien shall have priority superior to all liens, claims, and titles, except a lien for general ad valorem property taxes or an improvement district lien that is co-equal to property taxes. So after property taxes, we have the improvement special assessment, and then other lien holders. Of course, lien holders can withhold their consent for a project if they don't want it to be used on their property. We often get a question about liability for local government. And so again, there's language in the statute and ordinance that ensures that a county is not liable for the debt of the property owner. They're not a third-party obliger. They're not pledging or lending credit to the property owner. But then there's also the question of administrative burden. And I think we covered that by looking at the application process. Really what counties are being asked to do is to pass legislation. And then when they're notified of a project and the program administrator approves it, then they would just sign off on documentation and record the lien. So that would be the responsibility of the county. In the case of the municipality, it's even less of a burden. They're just passing a resolution, and then the rest of the program operates through the county. And then we already covered, who's responsible for billing and collection of loans. There's an extract here, but it's the responsibility of the capital provider. And then in terms of how interest rates are determined, similar to the private sector, this is negotiated between the borrower and lender. So we're not part of that conversation. We often get a question about administrative fees. So this is outlined in our program guidebook, and all our documentation, sample legislation can be found on our website. But our administrative fee is basically 1% of the total transaction cost, and it's capped at $25,000. So that would be, and that's only paid at closing. So all of our other services would be free, and that's really the sole source of financing for the program administrator. And that fee, I should mention, also can be rolled into the financing amount. So it's not something that has to be paid out of pocket, but can be repaid as part of the agreement the lender and borrower have. And then in terms of the responsibility for the program administrator, so this is, so far the focus has been really supporting local government to opt in through legislation. We provide educational outreach, we do presentations, answer any questions from interested stakeholders. Of course, a large chunk is processing project applications and connecting, borrowers and lenders to each other if needs be. And then we also do provide semi-annual reports to any jurisdictions that have opted into the program, just to update them on their financing loan portfolio. And this is my favorite slide because it's updates for our program. So I can share that the counties and municipalities that have opted in, and this is starting last summer, was our first opt-in with Bernalillo and Albuquerque. But we've also had Santa Fe County and City opt-in. Santa Fe City opted in just before the holidays. And then Taos County and the town of Taos have also opted into CPACE. And we're connected to a number of other counties that are interested in different stages of the conversation. They include Donna Ana, Sandoval, Valencia, McKinley, Curry, San Juan, Socorro, and Los Alamos. Donna Ana, I can share, has already started that process of passing the ordinance. And Los Alamos is likely to be another county that will pass their legislation sooner rather than later. And then really exciting news is when we closed our first CPACE transaction, and that was at the end of September on the Bishop's Lodge Resort. And that's one of the case studies that I'll be highlighting today. And the other piece that I really wanted to highlight is that currently we're connected with about over 10 out-of-state capital providers who specialize in CPACE financing. And they're very active, connecting with property owners across the state and helping to, or supporting us to pass legislation. The one thing I would mention is that these capital providers typically will only go as low as about $500,000, $1 million in terms of their financing. So as a program, we realize that there's currently a gap for projects, under $1 million. And that's a gap that we're looking to fill. And we've been in conversations with a number of credit unions and other local financial institutions to see, if there's interest in supporting that part of the market. We're really basing this off, some of the success stories from Minnesota and Colorado. We've had a credit union from Minnesota that's been able to come on board and share with some of their New Mexican counterparts how they've supported a number of projects that are under that 1 million kind of threshold. And then also really excited to partner with Lainie and Allectrify, who, I'll let her share more, but are providing some really invaluable services to help lenders enter the CPACE market. And so I think with Allectrify's support, we're excited to kind of fill this gap. And then otherwise, I'll go into our case studies. And I just want to highlight that this first one, Bishop's Lodge, is not a typical CPACE financing. It's quite large, even if you look at CPACE financing transactions that have closed across the US. So this was $76 million over 25 years. It was recapitalizing on energy efficiency and water efficiency improvements that began during a renovation 2021. So again, this is using that 3-year look back period. And then they were also making improvements currently to the facility, which included a wastewater treatment facility. And so this was kind of a unique example of being able to refinance to such an extent that it was able to cover the existing senior loan on the property and allow them to transition to more favorable financing terms. And then just kind of looking at typical improvements made, similar to the previous slide, interior and exterior lighting, high efficiency HVAC and domestic hot water systems, high performance building envelope, low flow plumbing fixtures, wastewater reclamation and desert landscaping facility were some of the improvements made. And some of the resulting annual utility savings for electricity was over 600,000 kilowatt hours. Natural gas, you'll see it's a negative number of therms, and that's because there was a switch from electrical to natural gas. And so that was not a decrease, that was an increase in natural gas. Over 5 million gallons of water is being saved annually. Over 800,000 pounds of CO2 has been reduced. And their cost savings on an annual basis is around 66,000. And then the second case study in our second transaction to close is the Modern Elder Academy, which is also in Santa Fe County, but just outside of city limits. This was maybe more of a typical transaction size of 10 million over 30 years. This was for their event and retreat center, which is located on a 160-acre ranch. They had done a new build of a few hotels on that property, and so CPACE was used to help refinance that construction, again, using that 3-year look-back period. And then similarly, we have a lot of the same improvements: building envelope, HVAC, heat pumps, lighting, low-flow water fixtures. And then there was some renewable energy in this one with solar PV arrays, solar powered entry gates. And they also had a liquid waste disposal facility that was constructed. And so this fell under the resiliency category. And then they also had a water conserving landscaping that was built into the improvements. And so their annual utility savings were about 60,000 kilowatt hours per year, propane of 752 gallons, water of 100 kilogallons, sewer, which is related to the liquid waste disposal unit, was 650 kilogallons was saved from having to be transported by trucks per year. And then for CO2 reduction, it was 33 metric tons, and their cost savings were lower, but their annual cost savings were estimated at $9,000. And then we're actually in the process of closing a transaction today, tomorrow, in Taos County. And so that's for the Hotel Willa project. So we don't yet have all the information in slides, but we can keep you posted. But there's a third transaction that's just about to close.
What's the name of the hotel?
Hotel Willa.
Great.
And that's in the town of Taos. And then this case study is not from New Mexico, but I thought I would throw it in because it's a bit of a smaller one, and in a different, field or sector. So this was 2.5 million over 20 years. This was in Chicago, Illinois. And it was repurposing an abandoned property, which was formerly occupied by a big box store, and turning it into an indoor farm. And so it includes, their annual electricity savings of over 3 million kilowatt hours, and their annual utility bill savings of over $300,000, and very similar improvements, although they integrated closed loop irrigation system into that financing package as well.
I can just see all our marijuana growers want to sign up.
Right. And yeah, I just wanted to kind of end by highlighting our website, www.nmcpace.com. As I mentioned, it has a lot of our information, our legislation, our program guidebook, and most importantly, probably our contact information. So we're happy to talk to anyone who'd like to learn more about, New Mexico CPACE. And I've included my contact information, and happy to have this shared if that's helpful. But yeah, I'll end there. I don't know if we're opening up to questions or maybe at the end.
Yeah, we'll open it up. Thank you very much, Eric. That was very useful. Alice, you want to ask your question? You're still on mute, Alice. I'll ask it for her. What is the average return on investment for participants?
That is a great question. I mean, we only have those two transactions that were closed, so they might give you an indication of some of their cost savings. That's a question I could reach out. We have a national association to kind of give a better sense of what, the return on investment could be. Lainie, I don't know if this is something that you would be familiar with and want to jump in on.
Yeah, it would just be helpful to clarify, I think, is this like the perspective the question's being asked from, it could be kind of like savings for the property owner, the typical terms or rates provided by the capital provider, or maybe it's a different question about kind of the economic benefits. So I just want to clarify that.
Okay.
Not totally sure.
And Eric, if you could send me the slides, I'll post them on our website when you get a chance.
Yeah, absolutely.
Thank you so much. Santa Fe County has a day-long training for their employees. So Juan Torres sends his regards. But he did suggest Johanna could talk a bit about what Santa Fe is doing and wants to see happening here in the city. So Johanna, welcome to the roundtable, and a few words from you would be great.
Great, thank you so much, Ken. Can you hear me okay?
Yep, we're fine.
Okay. My connection seems a little bit slow, so let me know. I'm seeing a delay in video. So let me know if I'll turn off my camera if needed.
Okay.
So great to see everybody. Thank you so much for setting this up, and good to see Eric. My name is Johanna Nelson. I'm the director for the Office of Economic Development for the City of Santa Fe, and interim director for the Office of Affordable Housing. We are thrilled. We could not be more excited to have finally passed our portion of this partnership with the county. Eric talked about how it's definitely a collaborative effort between the city and the county in order for us to participate and have our businesses and projects be able to benefit from this programming. Very hot off the presses. I think we got City Council to pass our resolution in December, I think it is. So we're rip roaring ready to go. We already had some projects in the wings that we have been connecting to them to Eric. And by the way, just thank you so much, Eric, for being so responsive. We get responses back pretty immediately from him to answer questions if our projects have them, and it's been fantastic. So Ken, you had kind of looked to us around what can we hope to see from this? Obviously, the benefit for us is there are so many different levels from an economic development and community standpoint. Many of our buildings, especially in Santa Fe, could benefit from a rehab or a renovation, especially to help weatherize their project or look at other alternative sources of energy, freeing up capital to do other things. So we're really thrilled to see that push and that step forward to support sustainability in our community. Juan is not able to be here from the Santa Fe County, but we work hand in hand. And I think you don't see that all over the state regarding the local government and the municipality working with the county. We're besties. So that bodes well for our projects because what can you expect from reaching out to us? And can I share my screen, Ken? I don't have slides, but I want to show you all how you can connect to us. And let me do that. So our website is in the process of getting updated. Don't expect too much. You see that? Nope. Let me share that. Oh no, did I share my screen? Can you?
There you go.
Okay, great.
Yep.
Yeah, don't look too much in this website, but I want you to understand you've got the key data points here where you can connect with all of us. All of our contact is here, our emails. I want to highlight our business development team that I think Casey is on. Casey Dalbor is our business growth manager. And then we've got Eric Renz-Whitmore here. And
Thank you.
Right. Hey, Casey. And Eric's on too, I believe. This is really your team where our local businesses, whether they come to us and they've got a development project or we're out hitting the streets and putting some boots on the ground, we're also looking for businesses that could benefit from knowledge about this program. We are kind of the front door to help connect to resources outside of CPACE. Eric and his great organization are really the experts in CPACE, but really where we come in is we can supplement that project. So we can consider, hey, is this a good candidate to connect you with the state for LEDA? Is this a good candidate for RDC funding, et cetera? So we've got those partnerships with other financial institutions and really can add to that capital stack to increase and leverage the resources for getting that project up and running. We're also associated, obviously, with land use, and we can help you navigate and figure out who to talk to at land use regarding permitting, regarding licensing. So we are really your team and your advocates for our local businesses to support them on their projects. We ultimately are charged with how do we make sure our businesses are successful and having the tools that they need to grow, to succeed, to hire people. And underneath that all is really that commitment to sustainability and making sure we're doing any type of development or growth with regard to what is healthiest for our environment and our community. So reach out to us directly. I'm going to say the same thing with Juan. Again, we are hand-in-hand partners, so you can reach out to him, you can reach out to us. We'll get you connected to the right folks. And I also want to make sure that you are aware of where to go to stay up to date with our many events and resources and news. We do a lot of events that are providing those connections to people and the networking opportunities that are so important. And so when you sign up for our newsletters, that's where you're going to find not only our events that we are hosting, but you're going to get just immediately plugged in and aware of, I mean, my goodness, Eric and Casey, there's dozens of events that we are posting bi-weekly that are going to help businesses be successful. We also are highlighting any resources that we come across. So these are the grants, the loan opportunities. We're also putting those in here too, bi-weekly. And then this also gives you a chance to sign up for our other 2 newsletters that help you stay connected. So we have a newsletter specifically focused on workforce. So this is if a business is an employer, how can we plug them into resources, as well as if employees looking for training opportunities and career development. And then monthly, we also put out general news to highlight the many accomplishments and successes that our community orgs have across the city. So we are busy, we're out and about. And again, CPACE is a win for the city, the county, and the state. So we are thrilled. Thank you again, Ken. Thanks to all of you on the call, because this is definitely a team effort to utilize this tool and get it out. So we're seeing the benefit of it.
Thank you, Joanna. You said you would be a booster for the program. You certainly are. Thank you so much.
100%. We're ready. We're hoping to get a press release out. We definitely are pretty good megaphones. So you got some cheerleaders over here.
Great. Thank you.
Thanks all.
If you could unshare, we'll move on to Lainie. And obviously, Bishop Lodge is an aberration. It's a huge project, so most of them, I'm sure, are not going to be that big. But as Eric said, most of the lenders are about $500,000 in size projects. So, Lainie, tell us how we can go below that and help really small businesses become much more energy efficient and sustainable. Take it away.
Fantastic. Thank you, Ken. And thank you for including us today. Very excited to be part of this roundtable and kind of what a cool convening of people. I have just signed up, subscribed to the newsletter, so I've already gotten something valuable out of it. And Eric, always good to hear your presentation. Exciting to hear about the projects moving through the pipeline. I've kind of put this presentation together knowing a little bit of what Eric might say in terms of background on the CPACE program in New Mexico, but in general, please feel free to interrupt with questions, comments. I want this to be helpful for everybody here, and the slides can be suggestions in that regard. And I'll try to keep the comment chat box open. Briefly, just by way of introduction, my name is Lainie Rowland. I'm the Director of Programs and Partnerships at Allectrify. Allectrify is in the CPACE financing business. Our tagline is CPACE Made Simple, and our goal really is to expand access to CPACE financing for projects of all sizes, close gaps in the market, and bring new and different participants into the capital side of CPACE. So as you'll see here, a little bit about what we do in terms of bringing new lenders and new sources of capital to bear on CPACE financing market. And then in particular, and I would highlight the bottom bullet is, where we really strive and where we really pride ourselves is enabling projects of all sizes, deals of all sizes, including at that kind of small to mid segment of the commercial market to access PACE and really benefit from the different attributes of the financing tool that Eric described. And we are Allectrify. Our product really is fast-paced, so this is an ability to execute CPACE financing for projects of all sizes highly efficiently with reduced transaction costs for borrowers and no cost to lenders. Eric spoke to this a little bit, but just in terms of context, New Mexico is not the only place where we're seeing CPACE transaction sizes really balloon. I mean, frankly, we've seen really fast-paced, pun intended, growth in the CPACE market over the past few years. We'd anticipate, just as the benefits of CPACE are more widely understood and new states and programs come online, that growth will only continue. In tandem with that growth, we have seen kind of deal sizes track upwards, as you kind of see on this chart. And to kind of some of the points that were echoed earlier, we've seen that increasingly these smaller commercial projects are having trouble accessing CPACE financing. And that's really where Allectrify and our fast-paced platform comes in, by filling that market gap and serving those small to mid-sized commercial projects with competitive and highly efficient CPACE capital. I have a few slides in here just about the benefits of PACE. We always like to hammer these home just because it is such a unique financing product, but I'm actually going to kind of move quickly through them here because I feel like Eric covered them fairly well. If you want to take a second and take a look, that's great. But in short, 100% financing for eligible projects, typically, amortizing over fairly long terms as a non-recourse financing, and so on. At Allectrify, we also work with lenders, and I'll speak a little bit about our CPACE new lender training, but I've included here some of the key benefits that we see for lenders, interested in getting involved in the CPACE financing market. Again, I don't think that this is a very lender-driven group, although we would welcome any local New Mexico lenders to join our upcoming CPACE new lender training. But hearing no kind of comments otherwise, I'm going to move along to some of the meatier slides here. So I want to speak a little bit about what distinguishes Allectrify's approach to CPACE, and kind of highlight some of the ways that we can work to meet the program goals that Eric described in terms of serving smaller projects, diversifying participation in the market, and making sure that the PACE program, is really serving the kind of policy goals holistically that it was designed for. At the top, I just want to emphasize, Allectrify works with a diverse network of lenders who use our platform to transact. So for any given, small to mid-sized commercial project, we are able to source flexible capital and secure a good fit solution for that project. We are able to execute on small projects with very streamlined and kind of standardized process. So we're designed to reduce transaction costs for the borrower and be as efficient as possible for the different parties involved, while obviously still providing a highly secure asset and enforcing and protecting that CPACE note for the lender, and following the requirements of the respective program in New Mexico or elsewhere. We are really differentiated, and we pride ourselves on our ability to serve and support deals of all sizes. Typically, we'll say that any project at 100K or greater is going to be a good fit for CPACE on our platform. And that's going to, come in far under what you'll see some of the typical deal minimums are from the specialty capital providers that operate nationally. So that's a big distinctive for us. And frankly, as a public benefit corporation and a mission-driven firm, really important in terms of promoting and supporting access to the benefits of CPACE and helping good projects get done at the end of the day. And then finally, not only are we able to support deals of all types and diverse asset types, we pride ourselves on simplifying the CPACE process for everyone involved in the closing, supporting the borrower to reach that project completion point as efficiently as possible, and then just kind of showing everyone the benefits of PACE and simplifying the path through the different requirements, which, you know, will look a little bit different than your typical commercial financing, you know, for the reasons that Eric described. I'll linger here for a second. I'm going to move a little bit into some of our resources and tools and some case studies, but I'll check if there are any questions that have come up. And if anyone else has a question or comment, it's kind of a natural break point in the presentation. All right, hearing none, I'm going to move along. This slide is probably one of the more important slides that I'll share today, and I wanted to run through some of the no-cost resources that Allectrify provides with the goal of growing that CPACE financing market. First and foremost is our CPACE new lender training. We offer a free 3-day training. It is hosted virtually. It's approximately 2 hours per day for interested lenders who would like to consider entering that CPACE financing market. And it's going to cover, you know, pretty comprehensively what you need to know to start transacting CPACE. We also offer free technical assistance to building owners, understanding that sometimes you have, you know, maybe a good project in mind, but you need some feedback to understand, here's what the return on investment will look like. Here's what, you know, this energy upgrade will mean in terms of the long-term performance of your building. And we work with a third-party provider to help property owners understand that information and use it to inform, you know, their projects moving forward. And we just find that in line with our goal of supporting good projects, sometimes you really do need to provide that support upstream of the financing and third-party feedback that helps people get comfortable with the projects they're hoping to pursue. So I'd be happy to speak to anyone, you know, anyone at a city or a county who might be interested in sharing that free resource with residents. It's something that we're happy and proud to support, and we just feel like it's very important to nourish high quality, high efficiency projects. And then finally, we work directly with a diverse array of market participants to make sure that they have the training and resources that they need to share CPACE and fast-paced financing options with their commercial customers. And that is part and parcel of our effort to ensure that CPACE is accessible and the benefits of CPACE financing can be widely shared, including at those kind of smaller commercial deal sizes. I'd be happy to, you know, discuss that further with anyone who's interested and kind of get a little bit into the nuts and bolts of what that looks like. Please don't hesitate to reach out if that might be of interest. And then finally, like Eric, I have a couple of case studies here showcasing the diverse range of CPACE closings using the fast-paced platform. Not only, I think, do they kind of give you a sense of the diversity of kind of good fit CPACE deals and everything that CPACE can be used to support in terms of different types of building performance projects. Also just some of the variety in CPACE financings, the different types of lenders on our platform, the different kind of approaches that they take to different types of projects as well. So I have 2 pages of these and happy to kind of dig into any that might pique interest. But on this page from top to bottom, we have actually an office to mixed use conversion where the CPACE financing was funded by CDFI. It was just under $1 million. And you'll see here a long list of high efficiency measures that were pursued. Below,
Can you explain what CDFI stands for?
Sure. It's a community development financial institution. So they're, you know, typically very community driven and they're focused on doing projects, and they have access to certain kind of pot of funds that support community development.
All right, thank you.
Yeah, of course. let's see, we have a project that we closed this summer in Billings, Montana, a number of improvements to a building that's kind of right in the downtown commercial corridor of Billings. So we're very pleased with that just because of kind of the nature of the space as a commercial anchor and kind of the wide range of measures we were able to support. We have below that a fairly small CPACE financing that was transacted on our platform. It was a $200,000 transaction supporting solar PV at a Holiday Inn in a kind of rural part of Missouri. So I like to highlight this as an example of a smaller single measure project. You know, historically, it's been very hard for these types of borrowers to access CPACE and kind of reap the rewards of the financing tool. But with the fast-paced platform, you know, we've been able to very efficiently transact and make sure that they can access, like you see here, a 20-year loan term to support the good solar PV work, which will save a ton of money over its lifetime. And then on this next page, we have a very similar deal, agricultural solar installation. I like to highlight this one because it was actually funded by a green bank. So it gives you a sense of the diverse set of lenders that transact on the fast-paced platform. We have green banks, CDFIs, community lenders, regional lenders, national lenders, specialty lenders, really a good fit for any type of project. And here again, you'll see, you know, the type of project that is typically having trouble accessing financing, agricultural use case, fairly rural family farm owned by this particular family for 100+ years, fairly small CPACE amount relative to what you typically see in the market. And we were able to get CPACE done efficiently and with reduced costs for the borrower. And then below, you'll see I wanted to highlight a couple kind of somewhat larger scale projects, though still at the smaller end of the market, as you'll see, compared to what's been completed in New Mexico to date. First, a hospitality new construction project, and actually an adaptive reuse project in Atlanta, Georgia. So I hope that's helpful to give everyone a little bit more sense of the variety in CPACE use cases, and happy to have, you know, any conversations to help promote understanding of, you know, this is what CPACE is good for, this is possible. And, you know, we're ready today to fund and support small balance projects in New Mexico, and we're very actively kind of connecting with different folks in the space to try to see how we can best help, as well as providing some of the training and resources for local or regional lenders.
Are you
to
okay?
get
What's
involved.
going on?
So with that, I will pause and kind of welcome questions. I definitely covered a lot of information, so happy to revisit or dive a little deeper.
Great, Lainie. Thanks so much. Very, very good information. Any questions for Lainie real quick? Okay, Lainie, and so Eric, if you could share your slides, that'd be great. We'll post them on our website.
Will do. Thanks, Ken.
And our final speaker, Zach Chavez. Beth, you want to introduce Zach?
Yes, I'm happy to.
Great.
And I
Beth
hope
is
there
our
isn't.
fearless founder, and has gone on to really get the Climate Investment Center off the ground. So thank you, Beth. Take it away.
Okay. Zach has just joined the New Mexico Climate Investment Center as Director of Market Development, and we are thrilled to have him. He came from Somos and is very conversant in both solar technologies and solar finance. And take it away, Zach.
Well, Beth, thank you for the introduction, and
Thank you, Ken, and thank you to the Coalition of Sustainable Communities for putting this all together today. I think that Eric and Lainie and everyone else did a great job overviewing the PACE program. So I won't spend a lot of time on those slides. But the reason I was brought on today was to really talk about how CPACE financing can work with other sources of funding. So up until now, we've been reviewing projects that are covered 100% by CPACE financing. And as you all read, that is because there's collateral associated with these projects. So existing buildings are in good position to take advantage of that 100% financing opportunity. But in the case of new construction and projects like that, as Eric pointed out, you're still able to take advantage of the CPACE program in those instances as well. So I wanted to talk a little bit about how these projects participate with CPACE funding and other sources of financing. A lot of this we've already covered. I just want to point out some of the things that CPACE lenders and other finance groups, or I should rather say other finance groups, find appealing about CPACE financing. It can cover a project's hard and soft costs. I really like that element of the financing with CPACE. I think that overcomes some hurdles when it comes to development, especially new construction. It is long-term financing, so that makes interest payments and debt service a little less onerous for certain projects. And it can be combined with local and federal incentive programs. So even though with changes of administration and other things, those things can be in flux, the ones that are codified and do survive long-term can be combined with this program as well. So speaking to some of the things that Johanna covered, I think that it's good to know that there are state and federal programs that you can combine with this financing and other sources of financing as well. Some of the common roadblocks, I'm really glad to have heard that a lot of the work that Adelante has done and some of the states counties and municipalities have covered some of these roadblocks. But generally speaking, I think this is why it took so long for private financing to really get on board with CPACE. There was a lack of understanding and therefore a lack of interest, I think, from certain sponsors and developers. And there was bandwidth concerns that have been addressed here in New Mexico and in other states. And so I'm glad to hear that we've taken an opportunity to do that at the county level. And the lenders are, from what I understand in the conversations I've had with them, more than happy to take on the burden of handling the capital is similar to a traditional construction loan or permanent financing. And then, again, something that we addressed in our most recent legislation, we did have some kind of restrictive and narrow language that included the project costs associated with CPACE financing. So up until a couple of years ago, when the new law was passed, it really was pretty narrowly associated with photovoltaic solar. But now that's really been broadened and opened up. And I think that's gotten developers to take a closer look at how CPACE can affect those costs associated with new construction. For our purposes, again, I'm trying to look at this through the lens of what new construction looks like. This is how the Climate Investment Center sort of sees the stakeholder map playing out. You may not always need every single one of these groups involved in a particular project, but you'll see many familiar faces depending on the type of development that you're working on. And so in the case of new construction, when CPACE cannot cover 100% of the financing of these improvements, there's a few reasons for that. The number one reason is going to be because new construction is not always going to, costs associated with new construction are not always going to fall in the category of CPACE qualified costs. And so you're going to be in a situation where you're going to need to bring other capital in to participate with CPACE financing to cover those costs, and it's going to look more like traditional development financing. So you'll have a senior lender. You will more than likely have the requirement of an equity investor that is participating in the capital structure, and then you'll have your CPACE lender. And of course, we have our administrators and municipalities involved. And New Mexico's Climate Investment Center, our green bank, is taking a close look at the program. And as we build our pipeline, we're very interested in finding ways that we can be involved in direct lending and other spaces associated with this kind of development. Nationally, Lainie did a really good job of giving us some examples of how CPACE programs can be, how green banks can participate in these programs. They do everything from administration of the programs to co-investment alongside CPACE capital to having their own CPACE finance offerings themselves. In the case of New Mexico, it's really refreshing to see that we have a very active administrator and that there is no shortage of CPACE capital available. And so for our part, we would definitely, the New Mexico Climate Investment Center, we would definitely look to supplement that capital and come in and create leverage for ground up construction of certain projects that fit our investment criteria. If you want to take a look at some examples of other green banks who participate in their CPACE programs and kind of how they do that, Connecticut, Montgomery County, Colorado, those are all great examples. There's a couple others listed here as well of states that play varying roles, all the way from administration to having their own custom CPACE offerings. For the New Mexico Climate Investment Center, as Beth mentioned, we're a green bank. The banking nomenclature is a little misleading. We are an investment group and we're not the typical depository bank. So that's not our function. We're really looking to make strategic investments into low-income census tracts. We do have an appetite for new construction or redevelopment. So in cases where CPACE may not cover the entire redevelopment cost of a project, that could be an opportunity for the Climate Investment Center to come in and supplement financing in those scenarios where certain costs of redevelopment are not covered by CPACE. We are really interested in affecting the state's residential market when it comes to solar. So we'd love to see solar on all rooftops or being fed into all communities, low income specifically and underserved specifically. And so whether that comes through multifamily ground up construction, multifamily redevelopment, or solar leases, when it comes to residential or commercial, we're eager to work with CPACE lenders and figure out structures that work to combine our capital with theirs and other capital that can drive these types of projects forward. And in that way, we are looking at direct lending and potentially, again, as we build our pipeline, as things open up, equity co-investment and participating in our own CPACE offering may come up. But as I said, there is an abundance of other capital out there, especially on the CPACE world, that I don't think would require the Climate Investment Center to necessarily compete in those ways. Instead, we'd love to work together with those different tranches of capital to really grow this program and see it have its largest impact. Just a little bit of an illustrative example of what a capital structure might look like in new construction. Again, in a CPACE example where collateral allows the developer or the project sponsor to cover 100% of their improvements with CPACE capital. You can kind of ignore this illustration, but in a scenario, and I'm thinking as an example of like a multifamily new construction development, this might be the makeup of capital that you see for that kind of development where CPACE plays a role in financing some of this improvement. Most CPACE lenders that I've interacted with, and I'd love Eric and Lainie to give us some feedback on folks they've talked to, in a new construction scenario, you're almost certain to have an equity requirement. It might be as low as 10%, some might go even lower. But in a new construction situation, those underwriting standards for most lenders on the senior lending side and CPACE side are just going to require some kind of equity, whether that comes from a sponsor, tax equity investor, traditional equity investor, opportunity zone equity. All of those types of equity funds in one way or another could definitely qualify as the equity contribution. Of course, you have CPACE. I've not seen many CPACE lenders that speak about covering over 25% of a project's cost with their financing. but there's also not a lot of projects when you're talking about ground up construction that have more than 25% of those costs qualified for CPACE financing. So there may be some special circumstances where you do have a very innovative building approach and construction approach that has a lot of qualified costs. And so I think it would be a case-by-case basis where lenders might go above that amount. But generally speaking, I think you can count on at least up to 25% of any CapEx being covered by CPACE qualified costs. Of course, you'd have a senior lender in this scenario where you're talking about new construction, and that senior lender's loan to value is always going to be something that's very sensitive and could affect interest rates. It could affect debt service for the project itself. And so I always like to think that the more equity and the more CPACE financing you can bring to the table, the lower that debt service ultimately will be. And so I would always expect a senior lender to exist in new construction unless you have a very, very large equity investor. That would be the only scenario where I would see this player maybe not being at the table. Pre-development capital is something I wanted to mention because I see it as a unique opportunity for different capital providers to come in and provide bridge loan services for certain projects. The reason I think this is interesting is because, as I mentioned earlier, and as Eric and Lainie pointed out, soft and hard costs are covered by CPACE financing. And so in a situation like that with ground up construction, where you have projects that are pre-NTP, I could see a structure scenario where a bridge lender comes in and finances the soft costs of a project associated with land studies, engineering, and really anything under a foot. So any kind of horizontal development that needs to be done on a property. And then that particular lender either rolling their capital into some sort of debt or equity position on the construction side and permanent financing side, or just being taken out altogether by the CPACE senior debt and equity capital stack. So I think CPACE provides a unique, it lowers the risk a little bit is what I'm trying to say for pre-development capital, whereas pre-development bridge loans tend to be very risky and very expensive. But I think accessing that capital when you're providing an instrument like CPACE that welcomes those costs and covers certain costs, I think that can be an advantage for developers as they're trying to put together these projects. To conclude here and be a little brief, I know you guys have been listening to a lot of presentations for the last couple of minutes here. So I just want to end by saying that, the Climate Investment Center does believe that, a robust CPACE program would really catalyze significant amounts of private investment into the state of New Mexico. And we do believe that, in order for us to meet our energy transition timelines, CPACE is going to have to play a pretty big role. I do very much appreciate that the lower CapEx projects, anything under $1 million and really under 500,000 is being thought of. But I do think it's also important to point out that CPACE can be used for larger projects. And it's interesting to see that $76 million outlier. I think that as you talk to different CPACE lenders, we'd be surprised to find that there's a lot of capital to the tune of, tens of millions of dollars per project that could potentially be put into play for the right type of development. So we will work with those lenders and other investors and all the folks on the call today to do our best and round up that capital as different projects are looking for certain investment. And as our pipeline grows, we'll be keeping a close eye on how we can participate as well, specifically in underserved communities, because we do see a huge need for those kinds of investments into those communities. So with that, I did kind of speed through this. It was a shorter presentation than I expected, but I appreciate everybody's time today. And as Beth said, I'm Zach Chavez. I'm the Director of Market Development with the New Mexico Climate Investment Center. And you can reach out to myself, Beth, or Mike, who's our Chief Operating Officer, if you have any questions about how the New Mexico Climate Investment Center is getting involved in the CPACE program. And I'm sure a lot of you will be hearing from me as well. So thank you again for your time. Thanks to Ken and the coalition. And yeah, I'll pause here for questions if anybody has any.
Great, thank you, Zach. Really helpful. I like the connections you're making there. I think it was very useful. Just go back to the speakers for one last chance. Eric, any closing comments?
No closing comments. I actually, thank you, Zach, for that presentation. That was so helpful. And I just wanted to maybe echo one point, because I feel like when speaking to 100% of financing could be misleading. And I just wanted to echo that, for a lot of the larger projects, from a program standpoint, we don't have limitations on how much CPACE financing can be used for the project, but capital providers definitely, have a limit, and that usually is, as was mentioned, in the 25 to 30% range. And so just looking at some of the case studies that were highlighted, they were refinancing, so it's a bit of a different situation, but they didn't cover all the costs of either the renovation or the new construction that was done. And so it was definitely just a part of the capital stack. So I just wanted to kind of echo that piece. And very excited, about this development with the Climate Investment Center, and excited to partner with you all as well, wherever there's overlap. Yeah, thanks so much for having me, and to all the other fellow presenters.
Great.
Yeah,
Thank you.
that's a good clarification. And just to be clear, like typically on the capital side, CPACE capital providers will size proceeds to LTV, and then obviously, also has to support eligible measures per the kind of purpose of the program. To Zach's point, typically for a renovation or a solar installation, you'll be able to access financing for 100% of project costs, because typically they fall within the LTV thresholds and they are eligible items. But also happy to speak to kind of new construction, and I dropped a note in the chat just in terms of the flexibility of CPACE as a part of that capital stack, and can be a really powerful tool for developers in that space. And I know I spoke a lot about small balance. It's a really important gap in the market, but we do have CPACE expertise to bring to bear if you are looking at a kind of ground up project, adaptive reuse, whatever it might be, something a little more complicated.
Thank you. Alice, you have a question or comment?
Yeah, and I apologize. I had to step away to grab a phone call, so I may have missed this, but I was hoping to know what, as a government agency that's doing a lot of public outreach and engagement, what is something that we can do to help drive clients to these programs? Like, yes, it's great to be pitching it to us, but like, what is the barrier or the ask that you'd have of us to help people understand the value of this work? I know sometimes the B2B approach is difficult because it feels like a sales pitch, but that's, I think, where local government can be that facilitator. So open-ended question, but it's also loaded because we're in conversation with the state to see if we might be able to do an industry survey. And if so, like, how can we pack in some information about the different financing options in a way that's palatable and doesn't scare people off?
Thank you,
So,
Alice.
Ken,
For your information,
Ken,
Alice, with the city of Albuquerque. Go ahead, Zach.
this is Kim. Ken, this is Kim Shanahan. Kind of want to answer that question, and mainly because it's kind of a chicken and egg thing. The question really is, do we go after the lenders in New Mexico, small lenders, credit unions, or do we go after projects that may seek lenders? And I would suggest to Lainie that she reach out to people like Alice and also Johanna, who's off the call, and Juan Torres, to really encourage them to reach out to the small lenders in the state of New Mexico to sign up for these classes that Allectrify is providing, because to the extent that those folks who have the money know how to use CPACE, then they will be connected to the businesses already, typically, who very well may not know about this, but if their lender partners already know about this, I think it really is about economic development people reaching out to the lenders and connecting that to Allectrify. One last point I'd like to make, Ken, also is that New Mexico uniquely included water into what is eligible for CPACE financing. It has to be permanently attached to a project, obviously, but water harvesting from rooftop rainwater, whether it's carports or the roof multifamily or office building, if it is captured in a tank in the ground and put back into the structure for flushing toilets, that's eligible. And in the city of Santa Fe, if you captured water, put it in a tank in the ground, put it back into flush toilets, the city of Santa Fe will give you 50 cents a gallon in terms of a rebate on top of what CPACE would actually lend you. And I don't want us to lose track of the fact that water, uniquely for New Mexico, is an eligible program. And it really is something that may be even more important than solar panels ultimately for development in the state of New Mexico. So thanks, Ken.
Thank you, Kim. You sound far away. Oh, yeah, you are. Okay, good. Zach, go ahead. And you're on mute, Zach.
Yeah, thank you, Ken. Kim, I think that's a great point about water. Just wanted to echo that. I think we spoke a lot about energy efficiency, but water is uniquely included in our legislation, and I think that that's something that we should take advantage of. But speaking to Alice's question, I just wanted to add the thought that, you know, there is a lot of, I know it feels like a sales pitch, Alice, and I totally understand where you're coming from, but I think in some ways that's probably a status quo that will have to be maintained. We'll just have to be a little bit more targeted with how we pitch these kinds of opportunities. I'm thinking of groups that already are developing in the state of New Mexico and that have other members. So I see RIA representation here. I also know that NAOP is a large development group. I think getting in front of those communities of developers who are in the renewable energy space and just in the commercial development space in general, and making them aware of how this program has taken off and you know, how active Adelante is, how there's lenders that are signed up. I think that lack of sponsor interest and developer interest that I was speaking to before, especially here in New Mexico, was because the last word that a lot of these folks had heard was that the program is stalled. We don't have, you know, county ordinances. They did not understand how organized that we've all become. And so I think that the new charge is to, you know, really spend some time getting back out and speaking in front of those folks. And, you know, between Adelante, Allectrify, myself, and the Climate Investment Center and the coalition, I think there's a lot of education that we can provide to those groups to say, hey, this is how the landscape has changed. You know, you should be made aware of this. And then really leading with the economics of everything. You know, I think everybody understands the benefits of the renewable energy efficiencies and those kinds of developments. But what I liked about what Eric and Lainie were highlighting in their case studies was that there is significant energy savings on the other sides of these things. And it's not just another form of debt service or a burden of debt that these developments have to maintain or take on for the sake of the environment, right? There's real economics that they can put behind that stuff now. So those are just a few thoughts as I think about, you know, how we might start to collaborate with everyone on the call to reach out to those stakeholders who are in the development space and talk to them about, hey, there's this new accessible tool that you can use, whether it's with existing developments or new developments that you're working on currently, which, you know, a lot of which might be looking for other alternatives to financing where there's uncertainty now with certain tax credits at the federal level with change of administration. I think people are probably looking for another arrow to put in their quiver. And so I would offer CPACE as that arrow to come in and say, hey, you know, you don't have to rely on ITCs or PTCs necessarily and the uncertainty around those kinds of things. Let's talk about how to swap those out. And that's just one example. I mean, there's other ways to position CPACE, but I think that's a conversation starter in some situations.
Yeah, as the flow of money from the feds goes from a gusher to a trickle, I'm really happy to hear about the CPACE option from bringing in private capital that's well choreographed to take care of a lot of the energy needs that are in these commercial buildings. So I'm really happy to hear how this might manifest in the future. Any other closing thoughts? Well, thank you much for attending, and I appreciate this. We'll put the recording up on our website along with the presentations. Thank you so much.
Thank you, Ken.
Thank you,
Thanks,
Erica.
everyone.
Thank you, Ken, for organizing.
Go coalition. Woo-hoo. Thanks, everyone.